Bitcoin ETF inflows might be the most important Bitcoin signal most people still ignore. Everyone watches the price. Everyone talks about resistance, support, and whether Bitcoin can hold 70K. But the smarter question is this: is real money still coming in behind the move? That is where Bitcoin ETF inflows matter. They tell you whether capital is actually entering the biggest spot Bitcoin funds, or whether the price is trying to move without real support. And right now, that matters a lot, because Bitcoin has been swinging around the low 70,000 range while ETF demand, Fed policy, and geopolitical risk all fight for control of the narrative. So in this video, I want to break down Bitcoin ETF inflows in a way that actually makes sense. We are going to cover what Bitcoin ETF inflows are, why spot Bitcoin ETF inflows matter so much, which funds are doing the heavy lifting, why Bitcoin ETF inflows and price do not always move together, and how you can use a Bitcoin ETF flow tracker without getting faked out by one headline. By the end, you should know how to read the signal behind the noise. Let's start with the basics. Bitcoin ETF inflows are the net amount of money going into spot Bitcoin ETFs over a certain period, usually one day or 1 week. If more money enters these funds than leaves them, you get positive inflows. If more money leaves than enters, you get outflows. That sounds simple, but this number matters because these funds are one of the main ways traditional investors get Bitcoin exposure without buying and storing Bitcoin directly. And because the products are public and easy to track, Bitcoin ETF inflows have become one of the cleanest demand signals in the market. Farside's daily table is one of the most watched sources for this data, and it breaks the flows down fund by fund. That fund by fund detail is where things get interesting. If you only look at the total line, you can miss the real story. A strong inflow day sounds bullish, but was it broad demand across the group? Or was one fund doing almost all the work? That difference matters. Right now, BlackRock's IBIT is the clear leader in cumulative net inflows, with Farside showing more than $63 billion in total net inflows for IBIT, compared with about $10.9 billion for Fidelity's FBTC. That gap tells you something important. The ETF market is not just growing. It is also showing clear issuer concentration, with IBIT acting as the dominant demand vehicle in this cycle. And that brings us to the next point. When people say spot Bitcoin ETF inflows are bullish, they're usually right, but only in context. Spot Bitcoin ETF inflows matter because they reflect actual demand for the products that hold or directly track Bitcoin exposure, not futures-based products or broad crypto funds. CoinMarketCap's ETF tracker and Farside both show this data clearly, and the reason traders care is simple. If spot Bitcoin ETFs keep pulling in money, that means institutions, advisors, and brokerage clients are still allocating capital to Bitcoin even when the headlines get messy. That is not the same thing as hype on social media. That is actual market demand showing up in public fund data. Now here is where it gets more real. Bitcoin ETF inflows and price often move together, but not always. That is one of the biggest mistakes newer traders make. They assume that if inflows are positive, price has to go up right away. Markets do not work that cleanly. CoinDesk reported earlier this month that US spot Bitcoin ETFs pulled in about $1.45 billion over 5 days as Bitcoin rebounded toward 70,000. A few days later, Investors Business Daily reported that March inflows had reached around $1.34 billion while Bitcoin pushed back above 74,000. That is a strong example of Bitcoin ETF inflows and price reinforcing each other. But CoinDesk also reported a case where over $1 billion flowed into Bitcoin ETFs and price still failed to respond the way many traders expected. So the relationship is real, but it is not mechanical. Why does that happen? Because Bitcoin price is not driven by ETF flows alone. It also reacts to interest rates, liquidity, global risk appetite, war headlines, leverage, options positioning, and plain market emotion. Reuters reported this month that Citi cut its 12-month Bitcoin target from $143,000 to $112,000 after U.S. crypto legislation stalled, which weakened expectations for regulatory support and institutional demand. Around the same time, Investors Business Daily reported that Bitcoin fell below $70,000 as the Fed signaled a higher for longer rate stance, and ETF outflows showed up on a day when broader macro pressure was already hitting risk assets. That tells you something crucial. Bitcoin ETF inflows are powerful, but they do not exist in a vacuum. So how should you actually read this? Think of Bitcoin ETF inflows like fuel, not a steering wheel. They can support a move. They can strengthen a trend. They can confirm that a rally has real money behind it. But they do not control every tick on the chart. If price is rising and inflows are strong, that is a cleaner signal. If price is rising but inflows are fading, that is a warning that the move may be running on sentiment more than fresh demand. And if price is falling while outflows start to accelerate, that can add pressure quickly. This is why Bitcoin ETF inflows today are one of the most searched phrases in the market. People do not just want the number. They want the meaning behind the number. They want to know whether money is still coming in, whether IBIT Bitcoin ETF inflows are carrying the group again, whether FBTC Bitcoin ETF inflows are confirming broad demand, and whether outflows are starting to break the trend. Let's talk about IBIT for a second, because you cannot really discuss Bitcoin ETF inflows without discussing BlackRock. IBIT has become the flagship fund in this entire trade. Farside's tracker shows it far ahead of every other US spot Bitcoin ETF in cumulative net inflows. It is not just leading. It is dominating. That matters because when IBIT posts a strong day, it can lift the entire category even if other funds are mixed. Recent reporting also highlighted days where IBIT was the main reason the total flow number looked strong. So if you're checking Bitcoin ETF inflows today, one of the first things you should ask is this: was the total strong because demand was broad, or was IBIT carrying the whole table again? Now look at FBTC. FBTC Bitcoin ETF inflows matter because Fidelity is usually the clearest second signal behind BlackRock. Farside shows FBTC well behind IBIT in total cumulative net inflows, but still comfortably ahead of most of the rest of the pack. That makes FBTC useful as a confirmation signal. If both IBIT and FBTC are green on the same day, the total inflow number is a lot more convincing. On March 16, KuCoin's market brief, citing Farside data, said US Bitcoin spot ETFs saw $199.4 million in net inflows, with IBIT bringing in $139.4 million and FBTC adding $64.5 million. That is the kind of day traders like to see, because it suggests more than one big player is attracting capital. But you also need to watch outflows. Bitcoin ETF outflows today can shift sentiment fast, especially after a strong streak. The block reported that on March 18, Bitcoin and Ether ETFs posted $219.2 million in combined net outflows, snapping a week-long inflow streak. Investors Business Daily also reported a $163.52 million spot Bitcoin ETF outflow on March 19 as Bitcoin dropped below $70,000 after the Fed's hawkish stance. So if you are only watching green days, you are missing half the story. Outflows matter because they tell you when demand is cooling, when profit-taking is showing up, or when macro stress is pushing capital back out of the funds. This is where a Bitcoin ETF flow tracker becomes useful. A good Bitcoin ETF flow tracker helps you avoid random takes from social media and check the numbers for yourself. Farside is still one of the best quick reference tools because it gives you the daily fund breakdown, cumulative totals, and historical highs and lows in one place. CoinMarketCap's ETF page adds a different layer with AUM, NAV, and holdings style metrics. If you use the same tracker consistently, you start to notice patterns. You stop reacting to every headline. And you get better at asking the right question, which is not just, was today green or red, but, what does this day mean in the context of the last week and month? And that question matters right now because the recent trend has been mixed. Earlier in March, Bitcoin rebounded hard and ETF inflows improved. CoinDesk reported a $458 million inflow day on March 3rd, which was one of the strongest daily inflow prints of the quarter. Then CoinDesk reported about $155 million in inflows as Bitcoin topped 72,000 and extended a 2-week inflow streak. Later, Bitcoin climbed back above 74,000 with March inflows reaching around $1.34 billion. But that strength was not perfectly stable. A few days later, outflows appeared, Bitcoin lost ground, and the market had to reprice against a more hawkish Fed backdrop. That is exactly why Bitcoin ETF inflows are so useful. They do not give you certainty, but they do help you see when conviction is rising and when it is fading. So what should you actually take away from all of this? First, Bitcoin ETF inflows are one of the best public demand signals in the Bitcoin market right now. Second, spot Bitcoin ETF inflows matter more than broad crypto noise because they reflect real capital moving into regulated investment products. Third, IBIT Bitcoin ETF inflows are still the headline driver, while FBTC Bitcoin ETF inflows act as a strong secondary confirmation. Fourth, Bitcoin ETF inflows and price often move together, but not always, because macro conditions still matter. And fifth, a Bitcoin ETF flow tracker is only useful if you use it in context instead of reacting to one number in isolation. At the end of the day, Bitcoin ETF inflows are not magic. They are not a guaranteed price predictor. But they are one of the clearest ways to see whether real demand is still supporting the market. In a cycle where Bitcoin is trading around major psychological levels and every macro headline can shake sentiment, that signal matters more than ever. So here is the question I want to leave you with. When you look at Bitcoin next, are you only watching the chart, or are you watching the money behind the chart? If you want more videos like this on Bitcoin ETF inflows, spot Bitcoin ETF inflows, Bitcoin price action, and the signals that actually matter, subscribe to the channel and drop a comment telling me this. Do you think IBIT stays the main driver of Bitcoin ETF inflows, or does broader fund demand need to step up for Bitcoin to make a real move higher?